Shiba Inu coin, SHIB-USD, named after a peculiar breed of Japanese hunting dogs, has risen in value from $3 billion to nearly $30 billion in just a few weeks. Shiba, like many altcoins, is valued at a fraction of a penny, making it easier to quote in terms of market cap rather than price unless you always have a calculator on hand. Shiba Inu gained to notoriety thanks to a brilliant move by its designers, who gave half of the coin's supply, worth over $1 billion, to Vitalik Buterin, the co-founder of Ethereum, ETH-USD. Buterin was in Singapore at the time owing to coronavirus limitations, and the Shiba Inu founders had transmitted the funds to his primary wallet, which also holds over $1 billion in Ethereum. This prompted some suspicions, but once Buterin and his team confirmed that the gift wasn't a ruse to steal his Ethereum holdings, they opted to burn 90% of the gift to prevent flooding the market and donate the remaining billion or so in SHIB-USD to charity. TikTokers and YouTubers have predicted that Shiba Inu will surpass $1, with their normal all-caps video titles and rocket ship emojis, implying a nearly 169x increase in value and a $5 trillion market cap. I believe we can fairly rule out this scenario, but the Dogecoin mania peaked in May with a market cap of well over $90 billion, which is more than 3 times the current market size and a more realistic potential for SHIB-USD. In September, Coinbase, COIN, started allowing Shiba Inu trading, which should help the coin's demand in the short term. Most cryptocurrencies aren't likely to be worth much in the long run, but the extreme volatility allows you to sell for much more than you invested in a short length of time. Furthermore, scholarly research reveals that assets with positive momentum tend to continue rising, with the challenge being to sell them when they reach their peak. FOMO, fear of missing out, is a real thing, and the world appears to be turned upside down right now. Friends of friends who do nothing but drink and smoke all day are amassing several years' worth of income gambling on meme stocks and crypto, scoffing at the idea of working for a living. Unless this time is truly unique, the speculative frenzy of 2020 to 2021 will finish in the same manner that all prior frenzies have, with speculators being crushed and running out of money, and fraud being uncovered as the economy cycle goes down. As a long-term investor, you shouldn't be concerned about this because, in many ways, the irrational speculation in some sections of the economy is creating opportunities in areas where money is scarce, such as international equities, small cap value, and energy firms. I feel that one factor that might significantly increase the price of Shiba Inu is if Robinhood, HOOD, allows clients to trade the coin. Shiba Inu's float is rather small, therefore if Robinhood clients are permitted to purchase it, the coin's value will certainly surge. This might happen or not. I'm sure regulators don't want Robinhood to be at the center of yet another meme-based speculative frenzy, but it's not like regulatory pressure has stopped Robinhood from doing what it wanted with crypto in the past. I don't own any Shiba Inus, but if Robinhood says they'll allow trading in them, I might get a few. The greatest risk to keep an eye on is the so-called whale wallet, which is someone with more over $2 billion in SHIB-USD and is considering selling. People who studied finance in school, I believe, are more likely to research such things and become stressed when assets are mispriced, whereas those who studied economics and history may laugh it off as simply another example of people acting irrationally. SHIB-USD is just another Dogecoin. Dogecoin, Doge-USD, has been a poster child for some of the crazier excesses in crypto over the last year. There are 3 key differences. Dogecoin has a built-in annual inflation rate of 4 to 5%, whilst Shiba Inu does not appear to have any, and Shiba Inu runs on the Ethereum platform. In the long run, I don't think the Shiba Inu has any worth. Over the last decade, over 10,000 cryptocurrencies have been produced, the vast majority of which have no long-term worth. There are only a few dozen precious and industrial metals, on the other hand. There are only a few main fiat currencies available. People creating their own currencies and producing speculative bubbles is not a new occurrence, according to history. The American colonists began minting their own currency shortly after establishing Boston in the 1600s, backdating it a few years in the hopes that Parliament would not notice. They quickly switched to printing paper money, and everything appeared to be well at first, so the British were unconcerned. However, Massachusetts became greedy after a few decades and ruined its currency with huge inflation, prompting a series of crackdowns by Parliament through the Currency Acts. Anton Krail, a former Goldman Sachs trader who had a British reality TV show around a decade ago, is one YouTuber I really like. He mentions that risk is subjective and not one-dimensional in one of his points regarding risk management. Someone who wants to trade crypto to pay their rent will have a difficult time making logical market judgments, whereas those who have gone with the flow have made massive gains by doing nothing. The appeal of crypto speculation is simple: you don't need a lot of money to do it, you can lose up to 100% of your investment, and you can theoretically make as much as you want. What do you have to lose by investing a few $1,000s in some risky ventures where the volatility provides you with a lot of flexibility? In addition to Anton Krayle's point about risk being subjective to your particular financial status, taxation is subjective as well, meaning that a single opportunity can be worth more or less to you depending on your tax situation. Because the U.S. government has established the tax law to discourage speculation and encourage long-term investing, speculation isn't free. The caveat is that if you have gains, you'll be taxed at effective marginal tax rates ranging from 30 to 60%, depending on state income tax and the various phase-outs of credits and deductions, among other things. This is asymmetric because if you lose, you can only write off your other gains for the year plus $3,000 and must carry the rest forward. Even worse, if you make the profits one year and lose the money the next, you may owe a large tax bill in the first year and have the second year's tax payment not net against it. If Robinhood signals that SHIB-USD will soon be available on their platform, investing a small amount of money in SHIB-USD and avoiding any negative tax effects will almost certainly make you a lot of money quickly. I wouldn't put my money on this, but watch to see if anything happens with Robinhood enabling SHIB-USD trading, and then decide whether or not to participate. If Robinhood allows Shiba Inu trading, I expect the price to triple to around $90 billion in market cap due to the lack of float. This is almost the same as Dogecoin's top market cap during its speculative craze. If Shiba Inu isn't allowed to trade on Robinhood, the coin will most likely fade into obscurity. In an ideal world, there would be a gap between Robinhood's announcement of support for the coin and its implementation, providing traders a great window to conduct deals before the feeding frenzy. Nobody knows anything about meme-based cryptocurrencies, but the past few rounds of madness have proved that if you're risk-averse enough to speculate yet clever enough to dodge tax issues, you'll be fine in the end.